Hey everybody, it's the Bitcoin Beast here again for the fourth and final video. I had to go back to my old trading system or my old trading platform. I know it a little bit better, so I want the videos to run a little bit smoother. I'm still learning TradingView, and I'm going to be learning other charting platforms, and that's an important video that I'll go back in a later series. But I just wanted to get the good stuff out of the way. Uh, get right to the meat and potatoes of it. And this is the fourth way to trade. Now, this works really well on Forex and then extremely well on things like gold and commodity type things where there's a lot of hype and news driven stuff, gold, oil, things like that, where uh, basically it's called a squeeze play. Now, there's several different indicators that you can use to spot a squeeze play. And you can just use price; it'll give you a clue. But to give you an idea where you're at in price, there's a couple of things I don't like about this system, but when it does work, it works extremely well. It's a phenomenal system, as you'll see here in a moment. Uh, Only use two indicators. There is one is it's called the moving average squeeze. This is a fast and slow moving average, and when it what happens is what we're looking for is when price wants to stay in a really tight range. It's really bound up, and then it's going to spring in one direction or another based upon some type of catalyst, a news event of sorts. The problem with this system is that it loses a lot more than the other systems, so it's not really good for scalping, but it is good for long-term trend trading and commodities and things like Forex, things that like to trend when Forex is in a trending mood, when there's a lot of different shuffling of different currencies going on. So it's very simple, very basic. People like to complicate it and make 18 gazillion videos of it, but I call it slow trend, quick trend, oomph. Very, very simple, very basic. You have a slow trend. This is the slow moving average. Let me see. Where's the? I don't remember what the amounts are. We have a fast moving average of 5 and a slow moving average of 21. And then it's got some smoothing, and a Tim Morris moving average is the one that I use for the fast, and then the exponential I use for the slow. That's the default settings. And what it does is it measures the distance between these two. And when these two start getting tangled up, that means price is in this tight bound range. That's what we're looking at. That's why it's called the squeeze. Price is squeezing. It's called the squizzy MA. I don't know what they call it, but squiz MA. I don't know. MetaTrader's got a lot of good things, but I'm finding TradingView has a lot of these good indicators as well now. They weren't as good as MetaTrader's indicators, but TradingView has gone a long way, and that's why I switched, because MetaTrader is great for Forex, but it's lousy for a lot of other stuff. People don't use it for other than Forex mostly. And then but TradingView, you can trade anything on TradingView, and it's probably going to become the number one trading application that's going to be used. So I'm trying to learn that, as well as a few others, like some of the more complex ones like Sierra Chart. I'm learning that as I go, but I know this one pretty well. So what this does is it starts painting these yellow lines, telling me that the price is that the moving averages are moved very tight together, and then when they separate, this moving averages separate, we get this push out, and then these disappear. And at the same time, this down here is called the TDFI, the trend direction and force index, and I got it set to 4, and a whole moving average is what I use for it. And what it does is it looks for these pumps. It pumps out, and gold likes to do this. Oil likes to do this. Is very good for trading oil display. But like I said, there's a lot of fake outs. See right here, the reason why I don't like it is because of the fake outs. But if you're patient and you can take can take big stop losses and patient, this can actually be very beneficial. So like here we get a squeeze play here. It pops, and then fails. So we wouldn't even be able to get in till this level here, because we have to wait for this candle to close to make sure that this is a valid signal, because this could pop, give us a signal, and then retrace back down right back into the zone. So it might not be a valid signal, and we won't know that. And these are 4-hour candles, so we wouldn't know for 4 hours. And so we're way up here. We're ending way up here, first of all, and then our stop is way down here. So that's a big risk that we have to take. But the reward potential is huge, as you'll see in a minute. But this time, this one failed, went back down, went back into a tight consolidation again, popped here, failed immediately. That time, that would have been almost a stop out. But if you put your stop here, you could have been holding on to this trade. If you're brave enough to hold it for a few days, you could have held this trade, and then it would have taken off eventually. But if not, you might have some parameters, like my parameters for exiting were these two candles, two red candles here. I'd be out. I would have got out right here for a small loss. I got in here, I got out there, so it would have been a very small loss for me. It was just my rules. And then this one here, same thing. I would have got in here, I would have got out here. Two red candles, I'm out. Doesn't work. So, but then this one happened. Popped out here, met my criteria. We did it barely, but it did. Met my criteria. You would think that this one would have done it, but no, this little candle here has actually got smaller and smaller. These got smaller and smaller. And then boom, it took off. Took off like a banshee. Rode that all the way up. You'd still be in this trade right now. That's the awesome part of it. Is once you're in, you can get in and you can stay in for a long time. If you ride this, I would just wait for another squeeze. Once it's squeezed again, that's when I would exit. That would be my exit. Very simple. There's people out there that complicate the hell out of this system. It's very easy, very easy. Wait for the squeeze. Wait for the volatility to pop it out of that squeeze in the direction that it's going to go. And you just take the trade when the candle closes, so that you know that it's not a fake out. And then for me, two red candles, I'm out. Or, I put my stop below the squeeze. That's where my stop is below the squeeze. So we got to stop it. I wouldn't have got stopped out here, but I would have exited here, because it went back to the squeeze. That's another indication that I need to exit. So you exit out before you actually hit your stop. But once you hit it, once these hit, you're in that trade. You're in that trend as early as possible. Nobody's getting in that trend trade earlier than you. That's the positive side of it. That's so you have to, but you take a lot more losses. You might only get 50%. You might only be hitting maybe even 40%. But that 40%, you ride that puppy all the way to the next squeeze. And this works really well with gold. Works really well with oil. I haven't tried it with crypto, but crypto tends to zip and not trend. So I don't think it would work. It would probably work, but you'd have to probably get a different exit, because the squeeze would take a little bit longer for it to coalesce, and it might actually lose it before you get the squeeze to come back. But when you get these nice trending moves, you're golden. And that's how many points is that? You got in here, you'd still be in this trade, riding this, no squeeze yet, for $161.50. Beautiful, beautiful. But that's the squeeze. And like I said, it doesn't work on everything. But it works very well on hype-driven commodities like oil and gold. And that's it in a nutshell. You get those 4 things down, you're golden, buddy. I'm going to continue to do some more things, some things that I don't like about trading, some things I don't like about gurus, other things. Talk about cryptocurrency. I'm heavily into cryptocurrency. Starting to get into futures. This is a new area that I'm getting into, and it's I like to teach as I learn, because it helps me learn. And so I'm learning about futures, and I'm getting caught up in that. That's why I'm learning TradingView, and I want to eventually learn Sierra charts. Hopefully I can find a decent mentor that can help me with Sierra charts, because it's pretty difficult. But I hope this helps you. Like I said, it's trading is not hard. You have to be patient and wait for the high probability setups. And this particular setup could be as low as 40%, but still be winning, because your trades, you exit out, you exit out, you exit out, and then boom, you get that super winner. When it finally hits, it could be even 30%, and that one winner negates all those losers that you had, all those little losers. Then boom, you get that one winner. So that's it for me. That's it for my trading series. I'm going to go into other things, different indicators, why I dislike most indicators. As you notice, I don't, the only indicators that I used were moving average bands, and I like TDIF. It's a volatility indicator, but I pretty much hate everything else. And I'll explain why in another video. And that'll probably be the next video, is why I hate oscillators. So that's it. Happy trading. I hope I helped you, and good luck out there, guys.